Do you have bad credit? Here's the top 10 ways to improve your credit to over 100 points today. Let's go. Hi, my name is Carlden Lainfiesta, the Mortgage Fiesta. I've been in business for over 10 years, helping hundreds of people purchase or refinance property. Today, I'm here to help you figure out how to get rid of bad credit, okay? So let's get started. Tip number 1, get a secure credit card. If you have below a 580 credit score, if you apply for a traditional credit card, you'll typically end up declined. So what you would have to do is go to a major bank and let them know you want to apply for a secure credit card. Now what that will do is they'll typically ask you to pay them $200 to $300 so they could give you a credit card with a limit of about $200 to $300. Now that credit card reports to all 3 bureaus and allows you to reestablish your credit. Now, few things to this. Of course, you have to pay that credit card on time, but the bigger thing is you do not want to max that credit card out. If your credit limit is $300, you want to stay below $150 at all times, typically even below $75. So the lower amount you can use on that credit card, you do have to use it in order to improve your credit though. So you can't just get a credit card and not use it. It won't help your situation. But if you're spending $10, $20 and paying it off at the end of the month, doing that strategy will lead to you having better credit. Tip number 2, add yourself as an authorized user. So for those of you who have family or friends that may have good credit, you can get added as an authorized user to one of their credit cards. Now you want to make sure that whatever credit card you get added to, that it's not maxed out and that it has a great payment history, because you're going to inherit both of those things, okay, for good or for bad. So make sure you're getting added to somebody who has a great payment history. Tip number 3, stay below 50% utilization, okay? So earlier example, if you have a credit card limit of $300, you want to stay below $150. Typically even below $75, which is 25% of the limit of that credit card. Credit companies want to make sure you can borrow money and repay it back. That happens with you spending as little as $10, right? So you don't need to max out a credit card in order to have great history of repaying that back in full. You just need to be able to borrow, repay, borrow, and repay. So for that reason, I recommend keeping your credit cards below 25% of its limit, no more than 50 ever. And that way you can pay it off in full at the end of the month, borrow again, and do it again, okay? Now, I do want to make sure you allow that credit to report. So if you spend $10, you want to wait till the bill comes out that shows that you spent $10, then pay it off, okay? But this is for people who are looking to build their credit, not for people who already have great credit. If you have great credit, paying it off before you have interest is very fine. Tip number 4, add various trade lines. So you can have credit card, which is considered a revolving debt. You can have an installment, which is like a car loan or a student loan. You can also have a mortgage and also a personal loan, which is typically an installment. But the various types of trade lines that you have help your overall credit rating. So it's not a bad idea to get a few credit cards if you can do so. Typically recommend applying for credit cards if you have above a 580 and up credit score. If you're below that, go for a secure credit card. Tip number 5, consolidate debt. So there are certain loans that banks offer that will allow you to consolidate your credit card debt. Credit card debt typically can have between an 8 and 25% interest rate. That makes it extremely hard, even if you're making a minimum monthly payment, to pay off that card. It could take you 10 to 30 years, depending on your balance and how much you're paying, okay? So you can look into a personal loan that will consolidate your credit card debt and make it an installment loan. That's going to add a different trade line to your credit report, but also typically that personal loan will have a lower interest rate, somewhere between, let's say, 5 and 10%. That's still going to help you way better than you paying 25% credit card, okay? Now, if you do this strategy, you're going to shift your credit card debt into an installment loan that has a set term, maybe like 10 years to pay it off, right? Do not go back and run up your credit card debt. It's going to make it hard for you to get any more assistance and or get out of debt. So if you're going to do this strategy, make sure you're paying on that installment loan, get it paid off, and make sure you do a great job of managing how much money you're putting on your credit cards moving forward. Tip number 6, strategize in paying collections, okay? So if you have collections, typically you can call the creditor, and you don't want to call them if you're not in a position to pay. You probably avoided them already, which is how it got to collections, right? So if you are going to call them, make sure you're in a good position to actually take care of paying on that debt. So if you call them, you want to negotiate how much you can start to pay to get the collection completely paid off. Now that only makes sense if you're going to be able to pay that credit card off in less than 7 years. The reason is because after 7 years, it falls off your credit. So if you do the math and you determine that if you make $50 payments on this credit card per month, it'll take you over 7 years to pay off the debt, you may want to consider not paying off that particular debt and taking that $50 per month and applying it towards something else that can be paid off in full sooner, okay? So this is a strategy to not waste any money essentially, because by the time you get that debt paid off, it'll fall off and you paid that debt for nothing, okay? You are better off focusing on making sure if you get any new credit cards that you're taking care of that debt rather than paying off some collections, okay? Tip number 7, to dispute or not to dispute? That is the question, okay? I will tell you as a mortgage lender that if you dispute trade lines above $1,000, typically you'll end up not being approved for a conventional mortgage. Above $2,000, you won't be approved for an FHA loan. So you have to be very careful on what you dispute. If you're going to dispute any trade lines with the hope of it falling off your credit, I would do that well in advance of you applying for a mortgage. I'm talking like a year in advance. That way, if the strategy works, great. It worked, the trade line fell off your credit. So you want to make sure that you give yourself enough time, because it can take anywhere between 3 and 9 months for something to fall off your credit once you dispute it. Sometimes it's sooner than that, but I'd rather be safe than sorry. Tip number 8, payment arrangements. So I touched on this a little bit before, but I want to talk specifically about student loans. For those of you who may have let your student loans go into default, you cannot get a mortgage with student loans in default for FHA in particular. So you would need to call your student loan company and negotiate a payment arrangement. Now, of course, you want to make sure that's something that you can easily handle, $25, $50 a month, something of that nature, okay? Once it's out of default, you'll have the option of going back to deferment or forbearance where you don't have to make a payment at all, or considering putting yourself on an income-based repayment plan, which I've seen people get approved for $0 a month on income-based repayment plan. So that would require you to submit some income documentation to the student loan provider in some instances, but still it's a better route than not paying it at all or letting it go to collections. Tip number 9, add bills to credit. So you might have heard of like Experian Boost or all of these different services that allow you to add non-traditional lines of credit like utility bills, your gas bill, your electric bill, even like your Netflix account, your cell phone. You can add these bills to your credit to help improve your credit rating. Now, it's something that I only recommend, of course, if you had a positive standing with paying your bills, because you don't want that to backfire on you. So make sure you only are adding things you're gonna have no problem with paying, so it helps improve your credit. Tip 10, charge off and medical bills do not have to be paid off in order to get a mortgage, but they might need to be paid off in order for you to get better credit, okay? So this goes back to strategizing. It may make no sense to pay off a charge off. And same thing with a medical bill. In some instances, it may not raise your credit score. So I would advise you to focus on open trade lines rather than closed trade lines, okay? Now, a good way for you to determine if paying off a charge off or a medical bill will help you is if you contact a mortgage lender like myself. We can run something called a credit expert report that will tell you if you pay off certain debt, if it will lead to a credit score improvement. We will have to run your credit in order to do that, so I'm telling you that in advance. But I typically will leave people with better credit than they came to me with, so it's well worth it, okay? And of course, the biggest thing that I did not cover that is common sense or should be, make sure you pay your bills on time. If you are beyond 30 days of paying a bill, that's going to be reported late on your credit report, and it takes somewhere between 12 and 24 months, so that's 1 to 2 years for your credit to rebound from a late payment. So you do want to make sure that you do not have any late payments at all. Hi, my name is Carlden Lainfiesta, the Mortgage Fiesta, giving you tips to help improve your credit, whether you want to buy a car, get a mortgage, or whatever it may do. I hope I helped you.